Morning everybody, it's Chris here from Serene Education. Just going to go over the four majors this morning, starting with the Euro against US dollar and our CTC strategy template. Let's have a look at the daily chart. Okay, so past 2 days you've seen, well, the past day and a half we've seen price revert to the downside. This is primarily because we've seen price now failing to break and close higher than the resistance level trend to the upside. You can see here, very noticeable. With that spinning top, we wanted a decision candle. We got that decision candle yesterday. Price traded slightly to the upside of it, however failed to break and close higher than the prior resistance level here at just under the 1444 mark, and price reverted to the downside. And this morning on the on the Asian market session, we've seen price revert lower. So open low and still trading to the downside. Notice this tiny little upside swing here. We are now seeing price testing it, and we have all the moving averages. So could possibly see a bit of consolidation this morning in this range. However, break and close lower than these moving averages here that it's actually testing as we speak. Could see further downside movement during the course of today. Let's have a look. If I just put this in, roughly speaking, okay, where is that? At 14,300. So you can see we're testing the 14,300 mark. If price can close lower than that, then obviously we can see further downside movement with the likelihood of ultimately we've got some resistance, support and resistance roughly around the 1415, 1600 mark. And then we know we've been to the 1400 because that's an ultimate long-term support and resistance level going back since the early starts of this year. So as we speak, price failed, break higher, spinning top. So we had bullish, then we had this bearish arami, the price action at the top end of a very bullish candle, followed by a very long trading wick, but very indecisive, forming the spinning top. Wanted to see a break and close higher, or wanted to see a break lower. We needed a decision candle. We have that decision candle. Price is looking like it's falling over. If it doesn't close higher today, forming almost another hammer of some sort, where we see a wick trailing below and more price action at the top end of it, we won't see a bounce, and then we should be looking for further downside movement to roughly the 1500 mark, or ultimately back down here to 1400 overall. The German PPR month-on-month figure has just been posted at 7 a.m. GMT this morning, and the forecast was 0.2%. They were expecting a 0.1% increase from the previous figure. It came out at 0.7%, so a 0.5% increase, which is a good sign for the euro, especially because most people look at the German industry, the Germans in particular, when it comes to any of these results. It's a leading indicator of consumer inflation, whereby the manufacturers charge more for goods. The higher costs are usually passed on to the consumer. It's called the Producers Price Index, the PPI, month-on-month figure. So we've seen July's figure coming from a previous 0.0. They were forecasting 0.1. It came out at 0.1. This month, however, we're expecting we're forecasting 0.2, so 0.1% increase, and it came out at 0.7. So this is a 5.5% difference. So seeing a bit of a movement to the upside there for the German Producers Index. So what else do we have today? We have public sector net borrowing for sterling figures coming at 9:30 a.m. GMT. Then we have Canadian core CPI month-on-month figures, which is going to be quite vital because previous figure was a negative 0.6%. They're expecting a forecast of a positive 0.2%, so that could be interesting. Other than that, not much else. Word is out that there has been an earthquake off the coast of Japan, and there has been a tsunami alert, so that could be interesting to see how that pans out. So End of week, we've seen a lot of volatility. We've seen a lot of volatility yesterday on the shares market. FTSE closing 5% lower. So still a lot of tension, nervousness relating to European debt issues. That's still causing ripples in the market out there. So end of Friday, we could see possible pullbacks as people start to scale out of their positions for the weekend. So we could see noticeable pullbacks today. Whether they trade to 23.3s or 38.2s or good old 50% retracements, that remains to see, but we probably possibly could see a slowdown today in the market as we head into the weekend. Next up is sterling against US dollar. Here again, notice a price broke and closed above the 16.4500 mark, which happened to be a price support and resistance level not so long ago. Nice bullish up candle 2 days ago. Then we had this candle here yesterday. We saw a lot of price movement to the downside. However, price reverted and closed higher. But on the Asian session, we've seen sterling taking a bit of a knock and it's trading lower. 16.4500 would need to be the daily support. So if price can stay above this area, then what we could be seeing is price breaking, pulling back, and then hopefully finding support at a prior resistance level, and a bounce higher would be the possible outcome for this. So 16.45 would be our support area. If price closes lower than that, then we could see further consolidation with an outlook of further bearishness. However, if we see price consolidating and closing higher than 16.45, then we could see a couple of days of hesitation level before we saw people reverting, or the institutions reverting to the upside in terms of bullishness, and ultimately our goal would be roughly here at 16,700 overall. So let's have a look and see if price continues to the downside. Will it find support at 16,450? And if so, can it find a decent foothold here so we could see a push higher? CTC is in our favor. So if you look at our intraday charts, let's put 16.45 as our support. You can see here noticeable resistance followed by a couple hours support on either side. Notice that going into the session we have lower swings, so it's depicting this consolidation. CTC on an hourly chart is looking bearish at the moment. However, it still needs to close lower than that 16.4500. It has broken the intermediate uptrend. Swing high, swing high, swing high, swing high, swing high, break. So break below 16.45 has broken not only the intermediate trend, but it's also broken a support and resistance level of some. And then if it does that, we've got to look for downside movement. Slight hesitation here at 16.400. More hesitation at 16.3500. There's noticeable stuff along the way here. We have another one at 16.2500. Ultimately, way down here at 16.10 would be our ultimate goal. But there is definite areas of potential targets to the downside if 16.4500 does not act as a support long term. Next up is US dollar Swiss franc. Past week or so we've seen the US dollar jump higher against the Swiss franc. This is as the Swiss government has intervened and level pegged their currency, so to try and stem this downside movement the US dollar has seen against its currency pair. So where are we now? Well, you can see definite negativity. Price is really making its way up to this major trend, downtrend, as you can see on the chart here. CTC is well extended to the downside, and the chart is pretty much red across the board, despite some blue and a couple blue arrows which haven't really made any difference because it's not trading above the major trend. 800 we know is a price support and resistance, and you can see price has failed 1, 2, 3, 4, going into its 5th day now. Price has failed to rally above the 80 because that happens to be a prior support and resistance level. You can see here hesitation, and we're also going now, well, we're also reaching that area now where we're going to possibly see the major trend being tested recently. We are trading above the 20 period moving average, which is a good sign. We've seen that upside, hence the reason why we have the blue arrow. However, for this to remain particularly bullish, we need to see it trading well above the major downtrend. So until such time as it's trading at least above 81 or 82, then we should still be looking for consolidation in this area here, with potentially another look at US dollar falling over. When we have to trade with the chart selling us at the moment now, and it's still bearish. We are in a consolidation to the upside, so trading intraday, you'd have been able to really profit in this upside movement. However, on a daily, this is just classified as a pullback because we are trading against the major trend at the moment because it's negative and we're just seeing a pullback. So got to see the major trend being breached and trading higher, and then possibly we could see the CTC template really working because we see the blue candles and then followed by the CTC on the other side going blue. But I don't think we'll see the CTC going blue on the other side until time we're well above this major trend here. So roughly 82, 8300 would potentially tell us because we're trading above the 50 in particular, and by then we're looking at potentially further upside movement. So as it stands now, 800, if you look intraday, if you look at an hourly chart, 800 is definitely a ceiling level. Notice since the 14th we've just had hesitation, resistance, 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 resistance. What's going to give up first? Is it going to be the US dollar? Are we going to see the US dollar just fall over and revert to the downside? You can see that it's posting higher highs. As we get close to this resistance level, we got to see a break either way. Are we going to see a break to the downside? Then we need to see a definite close. Lower bearish engulfing would definitely confirm that, followed by the CTC going in its favor. So red arrow, red candle, and CTC on the other side going red on our lower time frames. 30 minutes, 15 minutes, hourly, and 4 hours still showing positiveness as we've been heading higher. However, the longer we go sideways, there's more of a potential of a break to the downside. This is our 30-minute candle. Notice the hesitation, resistance, resistance, and notice our highs are getting lower as we've got close to this 80. So we're seeing price movements starting to lose momentum. We're still getting higher, so we can almost see this triangular squeeze or this wet patch and squeeze as we get towards 80. So heads up, we could see some sort of action soon, whether it's today or the new week, next week. It remains to be seen, but 80 is still classified as a resistance level, and until such time as price is trading above it, we should still be looking for consolidation with a bearish outlook long term. Last pair of the day is the US dollar Japanese yen. Daily still indecisive. As I mentioned this whole week, we've seen price testing the lows, the previous lows on this. If you trade the wicks, then that would be a low. If you trade the bodies, then you can see here definitely that we are seeing hesitation at the level. Spinning top doji, spinning top dojis, bearish underside. So we had a small movement here, and then we have doji. Sheesh, look at these ranges. Nothing, absolutely nothing. Then there's talk this morning, apparently there's been an earthquake off the Japanese coast and a tsunami alert has been posted. Let's remain to see if that happens again. But we know what the Japanese economy is going through at the moment now. We've seen the loss of 20,000 lives just recently. Back in March, they had an earthquake with a massive earthquake of 8 on the Richter scale, followed by a massive tsunami which literally killed 20,000 people. And really devastated the economy. We have seen price action fall noticeably, but that's only primarily because the US dollar has been taking a battering. The downgrade recently, the intervention from the Japanese government still hasn't stacked up, and we've seen price still reverting to the downside. So as you can see in our trend, if you just take this trend into focus, it's still looking very negative, and we've had a break recently of the 80 failed intervention. And now we're seeing to the price trend to the downside again. Tsunami alert. Could this play in the US dollar's favor? Remains to be seen. But we do definitely need to see some sort of true bearish count. We need something with a bit of confirmation. At the moment now we're seeing a lot of indecision, and you don't want to be you don't want to be trading a decision, to be honest with you. So we'd like to see a break and close lower than at least 76. 76. What are we looking at? 1, 2, 3. Yeah, roughly the 76.30 mark. So a nice bearish engulfing here would definitely confirm further downside movement. Otherwise, we see a bullish engulfing here would look at potentially the 77.50 mark being our first initial target. But as it stands now, there has been an earthquake apparently and a tsunami tsunami alert has been posted. So let's have and see what happens today if any further news comes out. But we want to see a decision candle. Are we going to get it today or next week? We have to wait for that decision candle. I won't be trading Japanese yen until we get a decision candle. That's it, guys. Hope you have a fantastic trading day. Please, if you are using the strategy, to follow it up with strong money management rules and stick to those rules. And most importantly, keep it simple and trade serenely.